Good evening, everyone. Happy Tuesday, I should say. Better yet, I hope everybody has had a wonderful new year. We are finally in 2021. Woohoo! Um, I don't know about you, but I am so glad to be done with 2020. Um, it's just, last year is one that no one will no one living in this moment will ever forget. I'm afraid. So, welcome everyone. Welcome. I have to remind everybody to please enable StreamYard. Go to the three buttons on the bottom right hand corner of your video and please enable StreamYard. This enables me to see who's commenting. I welcome all comments. I hope you get value from this video. I'm here to help all of you. So let's get started. As always, I always tell everybody why I do this. So I am here to help not only the small business owners, but now also new bookkeepers. Uh, we do this so that everybody has answers. For small business owners, it's COVID has created such a debacle with everyone, all businesses, all people personally, in every aspect of life. And most business owners right now probably cannot afford to hire a bookkeeper. So I want to ensure that you know how to do basic bookkeeping because I want you to understand what your financials are, what they're saying, what they mean, and what they say about the financial health of your business. The other aspect right now is the fact that I am now helping new bookkeepers as well. So this is a brand new aspect of the business. And I am here to help all of them with answers to their questions, with scenarios, with transactions, whatever the case is, to build up their confidence. Business owners and new bookkeepers, what I am showing you, what I am teaching you right now, it all goes hand in hand. So I just pray that you find value in this video, that you get a lot from it. And I hope that I can help explain what these things are, how you can obtain them, and what they mean for your business. So, as always, we do a little bit of a review of our last video. And our last video was 2 weeks ago, just before Christmas. And we went over the profit and loss versus the balance sheet. We also threw in there the cash flows report. And so I will show you again, since it has been 2 weeks, what those are. Let me share my screen so that you can see what I am seeing. So remember, we go to reports. And again, we are in the sample company. So you are not viewing any proprietary information from my clients, and everything remains confidential. Anything that I put into this sample company as of 24 hours ago is gone. So that's just the way it works. 24 hours and they cycle through. So everything is the way that it was before I ever touched it. So it's great for people that are learning. So again, your profit and loss always going to be a part of your favorites because this is the most important thing in your business. Besides making a profit, of course. But as far as a report goes, this is the most important report. So let's go to last year. And again, you see here, you've got all of your income, you've got your job materials, and they have actually put all of these in as income. Personally, I do not agree with the way that they did this because they're breaking everything down so that you have more information that you need. So, for me, what I would normally do is I would just say landscaping services, and then I would have uh, a materials reimbursement income, something like that, so that I can keep track of exactly everything that I have been reimbursed. And then down here, we've got our cost of goods sold. Those are the items that we are purchasing specific to jobs, specific to building a product, whatever the case is. Sometimes you'll see a cost of services sold here. So for us that's in the service industry, let's take myself for example. I will have QuickBooks subscriptions. For those, what I would do is, what happens is they actually charge me for it, and then I have to get reimbursed by the client. So, in order to make that up, otherwise it's a loss for me every month. And so that would be a cost of services sold. And then up here, it would be a reimbursable income expense. So, and things are done a little bit differently here in Texas, but that's normally the way that it would be done. Then we come down here and you've got all of your expenses. These are going to be your advertising, your auto expenses like your fuel, any repairs, your licensing, things like that. We've got all of your insurances. We've got job materials. Now, these are different from your cost of goods sold. Remember, your job materials could be materials that you used for your own deck or for your own landscaping, things like that. Professional and legal fees. And again, they put bookkeeper in here, but last time I checked, they don't consider a bookkeeper to be a professional fee, which I don't agree with, but that's the way that they see it. Maintenance, repairs, meals and entertainment, your office expenses like your supplies, um, could be some office equipment, some printers, maybe even some office furniture if it's below a certain amount, all of your utilities. Other expenses could be interest that you paid on your credit card. Miscellaneous, again, I pray you never use the miscellaneous. Don't even create it. Don't do not create a miscellaneous expense in your chart of accounts. If I if anybody ever calls me and says, "Hey, can you help me with this?" and I see that there's a miscellaneous expense, I will do a virtual hand slap. So that is a no-no. Because anything can go into a miscellaneous expense and you never know what it is, especially if you never put any sort of notes in there. So anyway, that is your profit and loss, also known as a P&L or an income statement. Our balance sheet, again, always going to be in the favorites. And let's change this. Now remember, in your QuickBooks desktop program, you will never change a date. Never. Unless it is for earlier. So it is always going to account for everything leading up to that date. It's not like what it is right here. It's never going to be from January 1st of 2020 to December 31st, 2020. It's going to be everything prior to 2020. So it's different in QuickBooks Online. So, in the balance sheet, we've got bank accounts. These could be checking and savings. I've known quite a few companies that have 7 and 10 bank accounts. Your accounts receivable, that's your money that you are receiving from customers on account. Other current assets, it could be your inventory, your undeposited funds. Remember, when you are collecting money from your customers. What that means is it's best to put it into undeposited funds because 9 times out of 10, the bank will not deposit or it will not show up in the bank deposit until the next day or after. And so you don't want to have it going directly to your bank account in QuickBooks, uh, and then things don't jive with the bank statement. God forbid you have someone in your office that is doing this for you. Excuse me. Someone that's doing this for you, and something happens, they lose a check or worse. Then if you have it put into the bank instead of undeposited funds, you may never catch that there is something there that was never deposited. If it's still in undeposited funds and you see something here on the balance sheet that says, hey, you've got something here, that is your cue to check it out, for you to look at it and say, okay, I thought I deposited that. What's going on? So it's a really nice thing for you to look back on in order for you to keep your accountability. So then we've got our fixed assets. These are going to be vehicles, buildings, um, some equipment, heavy machinery, things like that. It's never going to be land. Land is, well, I take that back. Land is a fixed asset. Land does not get depreciated because land does not fall apart after time. Buildings do, equipment does, vehicles do. So that's, the one little quip about it. And then we've got your liabilities and equity. And remember the equation for your equity. Equity equals assets minus liability, or assets minus liability equals equity. So your current liabilities is going to be your accounts payable, which is all of the bills that you are paying to your vendors on account. Your credit cards, it's always going to be put under something called credit cards, not, and it is a current liability. Don't get me wrong, but your credit cards are recorded differently than other current liabilities, not to be mixed up with these other current liabilities. Uh, for the actual other current liabilities, you've got your revenue payable, could be your sales tax, um, loan payable. Now remember, loan payable and notes payable are two different things. Loan payable could mean that you loan, as a business owner, you loaned an employee $700 to get a couple of tires that were flattened somehow. Uh, they're paying you back in a very short period of time. The other would be considered to be, I hate using this, but a payday loan. Um, that could be a loan payable, something similar to that. Your notes payable is a long term liability. A note is something that you hold on a vehicle, a mortgage, things like that. Something that's going to take more than a year to pay off. Then we've got your equity. The equity is what you own in the business. The opening balance equity, that's something that every company has, and it's always going to fluctuate. There should rarely be something in opening balance equity unless you are opening up a new account. It could be a new bank account, it could be a new loan, things like that. A significant asset, usually. Asset or, dare I say, a liability. That would be considered an opening balance. It always gets closed out at the end of the year. So retained earnings, that's what this gets closed out to. So there's always going to be something in retained earnings. Do not be alarmed. Your net income is what is on the actual income statement. However, remember that the net income on your balance sheet after the first month will never match what it says on your P&L, your profit and loss, because it's accumulated. It's it's not just for a specific month unless you actually choose it up here, especially if it's QuickBooks Desktop. So this will always show you a different number than what the profit and loss will always show you. And then we went over something that's not up here. This is that we're going to be going over here in just a few minutes. This is a statement of cash flows. And let's go back to last year. Now, your typical statement of cash flows, at least the ones that I've always worked on, is actually going to show you what the bank accounts show. So it's an easy way for you to gauge how much money is going in and going out every single week. And you can change how often you want to see the money fluctuating, but it's typical for an entire week. And it'll bring each week up per month. So this one is a little bit different as it shows you a lot more information. But this is something that you really should add to your repertoire as far as your different reports that you use, because you need to see where your cash is going from week to week, month to month. Okay, to the meat and potatoes. So, as I just said, that we are going to do the trial balance first. So, let me show you that. Yeah, let me actually. Okay, let's go back to last year. Okay, so your trial balance is a balance of every single account that you have for the entire period that you're looking at, usually for the entire year. It is accumulated unless you tell it a specific period. So, for instance, if your CPA gives you something and tells you that they want you to check the trial balance against what they have on file, because most CPAs, they're going to have your QuickBooks file. And so what you want to do is you want to check those checks and balances. You want to make sure that everything matches with the CPA and yourself. And so this is the easiest way of doing it. So what you do is you are checking everything, every single amount. These are the overall balances for that given time. This is for the year. And what it should always come out to is something that is completely balanced. If you have two different amounts here, something has gone horribly wrong and you need to look. So this is a trial balance. Very simple. Depending on how large your company is, your trial balance could be 6 pages long, if not longer. It depends on your chart of accounts, how large your company is, how much money, how many products you actually want detail in. So it really depends on how you've been set up in your system. So that is a general trial balance. Very simple and yet very, very important. And now we're going to go to something called an audit log. This is something that most business owners, in my opinion, do not know about. And we just need to find it here. Here we go. Audit log. What is an audit log? Well, you can pretty much figure it's exactly what it says it is. An audit log is a log of every single thing that has happened financially in your company at any given time. So if you have multiple employees that are going into the same QuickBooks file, you find a mistake somewhere and you want to question that person about it, you go to the audit log and it'll show you right here who created that transaction, when they created it, what time they logged out, what time they logged in. So, this is where you really want to go in order to manage everything that's happening. If you have someone or some person, some people actually entering all of the data. So, if it's just yourself, you don't have to worry about it unless it's something where you're asking yourself, did I actually do that? I don't remember doing that. Why did it come out that way? Then you can look it up here. Um, and of course, you can actually tell it how far back to look. If you have an employee while you're doing it, or you have multiple employees, then it's easy to come in here and actually check and see who did what. Um, this is a really good thing if you are a bookkeeper and you happen to have a client that thinks that you did something when you know that you did not, when it was something that the client actually did, which doesn't happen very often. I unfortunately have had it happen. And so I became very familiar with the audit log and actually printed this out for a client. So um, this can be your best friend. So it's there to clear your name. It's if you're a bookkeeper, it's there to cover your butt, but it's also there in order to ensure that everything is being done correctly. So that's it for these reports right now. And I just wanted to kind of give you a little update about what's been going on. So yeah, things have been just full speed ahead for Miss Elsie's bookkeeping, and January 1st happened, and it came around, and more than just 2021 arrived at our doorstep. So, as you can see here, we've got all new equipment. I've got a green screen behind me, a very large one actually that my husband actually has to help me or set up himself. And I try to assist where I can. Um, I've got this new graphic in the background because my business has basically done an about face. It has, as many of you know, my husband and I are both devout Christians, and God has proven to us that He has pivoted my business. And like I said, it's just done an about face. So I am still helping clients. I'm helping my clients. I'm still taking on new clients, but that's no longer my focus. My focus is on helping other people. And when I say other people, I mean with education, with mentorship. I now have a mentorship program um, that seems to be developing all the time and uh, just seems to constantly uh, switch lanes occasionally and excuse me, really, what's the word I'm looking for? It grows and changes. And so, yeah, it's it's been crazy. It's been good. It's been great. It's been crazy. Today has been a very crazy day. I haven't had hardly any time to do anything. So, um and we are developing other new things and things to help out other new bookkeepers. We're trying to figure out how to help out new bookkeepers in the best way possible. I just today actually just rolled out something brand new that only one person right now knows anything about other than my husband, which is a beta program. And that beta program is specifically geared towards mentorship, but it is for businesses, not just bookkeepers, but for businesses. And it is a monthly program that helps all of them out and mentors them and gives them so many hours every single month and kind of allows them to learn everything that they can in that amount of time. So we just rolled that out today, and I've got my first person that's actually testing it out right now. So um, we've we've got other things that we're looking at. You know, we've got these forms that everyone fills out for the mentorship program, and that's currently being evolved. And then there's these videos and other videos that I'm sure will be added on to everything in a new series once this is over. Um, we've got coaching, we've got possible courses, we've got case studies. There's so much that it's almost endless on what can be added to everything that's happening right now in order to benefit new bookkeepers, but also business owners that want to learn. So, like I said, it goes hand in hand. So, and the reason why I chose this backdrop is because wrong side. Everything is opposite here. So you see the butterfly here. I've always been all about butterflies. And the reason is butterflies never start out as butterflies. They start out as caterpillars, and these caterpillars, they're learning, they're growing, they're gaining everything that they need, their nutrients, their knowledge, life experiences, everything that they need in order to create or get to that point to where they create that cocoon and they're redeveloping themselves. They're becoming something brand new. And then one day they break out of their cocoon and they emerge this absolutely beautiful butterfly that's ready to take on the world and ready to tackle everything that's ahead of them. And that's why I chose the butterfly because new bookkeepers that may not know how to tackle everything, all of the challenges that are ahead of them, they're learning. They're still the caterpillars. They're getting ready to create their cocoon so that they can become. And so I really wanted to bring that butterfly to the surface and show them that it may take time, but it's going to happen. So I hope, again, I know I've already said this a few times, but I hope you found value in this video. Our next one is tomorrow night, 7 p.m. Central, same time. Uh, we are doing the reporting again, but this time it's going to be on aging reports. So this is specific to AP or accounts payable. And so we've got two more on reporting. Tomorrow is on AP. Thursday is on AR, which is accounts receivable and collections. So tune in tomorrow, 7 p.m. Central, for some more on reporting. Next week is when I really hope all of you tune in because we've got some really important stuff to go over, and this one may end up going over. I'm betting that it is going to probably be closer to an hour-long video. It is on some extremely important stuff that none of you can afford to miss. You all need to know all about all of this, especially if you are in the construction industry or a bookkeeper looking to get into the construction industry. So I pray that you can all make it next week. Next Tuesday is going to be the really, really big one. So, um, anyway, tune in tomorrow, 7 p.m. Central, for um, some more reporting. So I will see y'all tomorrow night. Thank you.